You think buying a stock is simple, right? Tap a button on your phone, boom, you're done. But what if I told you that behind that simple screen, there's this whole hidden world? Like a secret plumbing system, a high-speed jungle where your order zips through pipes you've probably never even heard of. So yeah, let's get into this because knowing about this stuff, it can literally be the difference between a solid trade and a really, really expensive mistake. And I mean really expensive. Look at this number. This isn't some made-up example for a textbook. This is the real, honest-to-goodness, wallet-crushing cost of one person's mistake. And get this, it wasn't from a market crash, it wasn't a bad stock pick, it was from a single trade on a totally normal Tuesday. $40,000. Poof, gone. And here's the kicker, right? This is the most important part. The loss didn't happen because the stock tanked. Nope. It happened because the person trading had zero clue about the crazy complex system that was actually handling their order behind the scenes. They were basically fighting a system they didn't even know was there. See, they were so focused on what to trade, but the real knockout punch came from how it was traded. Okay, so let's do it. Let's pull back the curtain and actually look at this secret plumbing. We're going to trace the journey of your trade second by second, or really millisecond by millisecond, after you click that button. And we'll see why it matters. A whole lot. All right, now this right here, this is probably going to blow your mind a little. We all kind of assume that when you buy a stock, your order zips right over to a big public exchange, like the New York Stock Exchange. Makes sense, right? Well, look at the data. It's totally clear. Today, more than half of all U.S. stock trades happen off exchange, in private places, away from the public. So a huge piece of this hidden world is something called a dark pool. Sounds kind of ominous, right? Well, think of it like a private club for trading. It's where big buyers and sellers can find each other and make a deal without tipping off the rest of the market first. Originally, they were set up so huge investment funds could trade massive blocks of stock without creating a tidal wave and spooking everyone. But they've evolved. They're a much bigger deal now. And if you're like most of us, using one of those zero-commission trading apps, well, this next part is where the magic, or, the misery really happens. It's called an internalizer. These are giant firms, also called wholesalers, and they literally pay your broker for your trades. Yeah, you heard that right. So instead of your order going to a public exchange, the internalizer handles it themselves, in-house. And their goal is to make a tiny profit on the spread, that little gap between the buy and sell price. Okay, so let's break it down. In the blink of an eye, your order can go down one of three main pipes, and this table lays it out perfectly. You've got your lit exchanges, that's where everything's out in the open, total transparency. Then you've got the dark pools, offering secrecy for the big players. And finally, the internalizers, who are all about handling tons and tons of regular folks' orders. And here's the thing, your broker has a smart router that decides which pipe to send your trade down. And believe me, that choice makes a huge difference in the price you end up with. So, back to that $40,000 mistake. It was awful, for sure. But it was also an education. A very, very expensive one. It revealed some brutal truths about how this whole system actually works. So, let's unpack the lessons that were bought for the price of a new car. So, here's a term you've probably heard your broker throw around: best execution. It sounds great, doesn't it? Like a promise that you're getting the absolute best price in the entire market. But it's not. In the real world, it's just a legal term that means they did their reasonable diligence. It's the bare minimum, the floor. It is not a guarantee that they're putting your interests first. And in that $40,000 disaster we've been talking about, the broker's smart router actually worked perfectly for the broker. It chopped up the big order and sent the little pieces to places that made the broker the most money through things like rebates. The trades were all legal, sure, but for the person who made the trade, the results were ugly. The router was smart, all right, just not for the customer. And this slide just says it all, doesn't it? We get so excited about free trades. Saving $5 on a commission feels like a win. But what the pros call slippage, that's the hidden cost of a bad execution, that can cost you so much more. In this case, saving $0 on a commission was, well, it was a joke compared to the 40 grand that vanished into the plumbing. There were a few more hard truths that came out of this mess. First, liquidity, the ability to buy or sell easily, isn't just an on or off switch. It's different everywhere. Second, the two things that can hurt you the most are your trade size and how badly you need to get it done right now. But here's the good news. The most powerful lesson is this. Unlike a surprise inflation report or some random event, market structure, this is a risk factor you can actually do something about. Okay, so how do you do that? How do you actually protect yourself in this complicated, hidden system? Well, here's a simple 15-minute playbook. Let's walk through it. It all starts with doing a quick checkup on your own broker. And don't worry, this sounds way more complicated than it is. Step 1, just Google your broker's name and the words Rule 606. That'll take you to their disclosure pages. Step 2, look at who they send most of your orders to. Who are their top 3 partners? Step 3, check their stats for price improvement. That's a fancy way of asking, how often do they actually get me a better price? And finally, step 4, see if you even have the choice to send your trades somewhere else. And from now on, before you make any big trade, let's just say anything over 10 grand, run through this quick mental checklist. First, is a lot of this stock already trading in those off-exchange venues? Second, am I trading right before or after some big news? Third, can I maybe break this order into smaller pieces? And the big one, does my broker give me any control over where my order goes, like a lit exchanges only option? Just asking these few questions can save you from a whole world of pain. So when you boil it all down, it comes to this one thing. We spend so much time researching stocks, right? We're looking at charts, reading annual reports, watching the news like a hawk. We really know our stocks. But the real question is, do you know your broker? Do you have any idea what's happening in that hidden world they operate in? Because at the end of the day, understanding that is what separates a truly savvy investor from just being another cog in Wall Street's plumbing.